Vanakkam. It's always good to come back to Chennai. Like sir mentioned, I started my career in Chennai. I've grown with many of our friends. Few of them are in the room, few are outside the room. You must have heard this term called BAU, business as usual. So mine is slightly different. Topic today I picked up is slightly different from it, which is growth, GAU, which is growth amidst this uncertainty we see. I want to do a small exercise before start my presentation, share my thoughts, and that way we will fill for the time as people come into this room. How many of this in this room have started association with mutual funds since 2004 or before? Can you raise hands? 4 and before. Okay, very few. I think I am one of those minority. Okay, how many of you have born on or after 1985? Raise the hands. If you have both, like, born after 85 and started in this, raise your hands. Okay, we still have a good number of people, much more than this one. Okay, so one who has done both, very nice. So I want to share some thoughts, how to grow business 50 times in 20 years. If you currently running a business with 100 crores AUM, yes, I think the minute you stood up, people understood. Thank you. So if you are running a business with 100 crores AUM, how do you take it to 5,000 crores? If you are already at 200 crores, how do you take it to 10,000 crores? Is what the topic, few thoughts I want to share today. I'm sure a lot of you would be thinking 50%, 50 times, not 50% growth, but 50 times in 20 years, how is it possible? The reason why I asked a question to at the beginning that raise hands if you have started career in 2004 is because of this. What I am telling you that 20 years, 50% growth, 50 times growth is actually happened. In 2004, the industry size was about 1,30,000 crores or thereabouts. We are now, mutual fund industry is about 68 lakh crores. What is the number of times the industry has grown? It's 50 times. It has happened in front of our eyes. Our friend Suresh has seen, I have seen. When I joined the industry in 98 on the mutual fund side, the size of private sector mutual funds was 20,000 crore. If somebody has told me that, by the time you retired, industry will be 10 lakh crores, I would have not given a chance. 50 times in 35 years, I would have not. But I have seen this happening in 20 years' time. I am sure many of you who have started career association with mutual fund in whatever form and shape in 2004 will watch for it that it has happened. So 50 times growth, we have to be fortunate that we are in the right industry, has happened, and I do believe it happens. I am not a minority in this group which believes that next 20 years also industry will grow 50 times. Recently in Amphi event, Amphi released a industry vision book in association with CRISIL, and I am highlighting some of those statistics from that number. One, they are saying that the industry will grow 52 times by 2047. In 22 years, they are saying industry size will grow 52 times. And what is also important to note, the retail AUMs will go faster than the industry at 57 times. So we all have to be thankful for all good karmas we have done. We are in an industry which is grown, and it is likely to grow for the rest of our professional life. For next 20 years, this industry will continue to grow at a pace which has grown over the 20 years time. Another interesting fact I want to highlight is, it is despite this growth, the percentage of retail population invested in mutual fund will remain only at 15%. So currently it's 3% of our population. When it grows another 50 plus times from current level, only 15% of Indian population would have invested in mutual funds. So that's very, very interesting. I found this interesting statistic. Well, we sometimes get worried about some volatility in the market. Now I'm sure in a week's time the mood has changed little bit. But if I had come when I was started preparing for this presentation, I am sure that everyone is more worried about a volatility. But the reason why I believe that for next 20 years industry will continue to grow are here. One, POC. When I started a career in 96 or 98, 99 period, I was selling a hope that equity as an asset class will do well. Equity mutual funds will help you create wealth over a period of time. Do I have any statistic to show? No, nothing. There is no mutual fund which has actually created a wealth for investor, because first private sector mutual fund started in 93. It has its own track record, but not a long-term track record to showcase. But today we have funds which have a 20, 25-year track record, has created so much of wealth for investors. So it's relatively easy to convince somebody who has never invested in mutual fund taking up first steps in mutual fund. Secondly, you as a advisors, distributors, we as a manufacturers, and a large percentage of existing investors have gone through the cycles. And there is an experience we know. I'm sure if you have an investor who has invested in 2007 or 8 in equity mutual fund, today I don't think he will be panicking. Those who would have invested post-COVID may be in the state of some panic. But we have a lot of investors who have gone through the cycle. Therefore, they themselves will come and invest more money when they see opportunity like this. Third, the awareness levels of mutual funds are going up. When I joined, my firm used to be known as Templeton Mutual Fund, then subsequently it became Franklin Templeton. So when I used to go to meet somebody and say that I am from Templeton, they say, you are coming from Temple Towers. If you know, near Nandanam, there is a Temple Towers. And no, I used to say I am from Templeton Mutual Fund. Oh, you are from another chit fund. Okay, but now it's changed, right? Mutual funds have become a Gaon Gully product, and thanks to the efforts you have put in, thanks to the efforts manufacturers like us has put in, thanks to the efforts of AMFI, which has made mutual funds a very, very popular product. And there are a lot of first timers who are coming into the market. And thanks to the technology that has also enabled people investment experience a lot more better. So given this, I do believe that these numbers are not unrealistic. This is very quite possible to happen. And another way of cross-checking this is you look at any of the developed market today, the size of a mutual fund industry therein is bigger than the GDP. Its ratio is between 100 to 150%. And what is projected here that if industry grows 52 times in this 22 years, the size of a mutual fund industry in India will be 112% of a GDP then. So it seems to be something which is possible. Maybe I am not, I will still be hopefully alive, but will be outside the industry, will be watching this. So where is this growth is going to come from? If I have to look at investor base. Like I mentioned earlier, mutual fund today have crossover from being a product for classes to masses. It's become Gaon Gully product. So your potential investor for our industry can be a taxi driver, can be a farmer, or it can be a kirana store owner, besides the professionals we have used to envisaging. So there is a wide spectrum of participation is what I'm expecting to drive the growth in the industry. But if I have to be very specific and talk about some opportunities, I am taking 2 parameters to say these are drivers for the industry. One is the profile of our investors. By profile, I am saying that existing DIY investors, those who have come into mutual fund post-COVID, to me it represent a big opportunity, especially for MFDs like you. Why? Because they have come, because they had a time during the COVID time period, they had surplus savings, and they also saw market going up, and there is a technology available, so they had nothing to do at home besides talking to family members. They said, okay, let's dabble in stock market, and then migrated to mutual funds. But now they are left with a situation, they don't know who to talk to and get some answer to those questions they have in mind. So all of them represent a big opportunity for us as a community. Now we can go and talk to them and tell them that investing in stock comes with a risk. Now you're seeing the fruit of pudding. Now let me help you with this financial journey. So that's one segment. There are segments like women, NRI and first timers. I'm going to spend some time talking about women and NRI in specific. If I have to look at product, if I have to look at opportunities from a product perspective, FOF is going to be a big opportunity going forward in the near term. SIP, the Choti SIP which SEBI has introduced, is going to be a big opportunity. I'm going to talk a little bit about it. And GIFT City and new class of mutual fund which SEBI has allowed mutual fund companies to launch, SIF, is what I see opportunities. To start with a profile, I'm going to talk about women and NRIs here. Women, to me, represent a big opportunity for us, because so far, whenever we have envisaged an investor, potential investor for us, whether we like it or not, in our mind it is mostly men. But what is happening is, if demographically speaking, women are about 48-49% of our population. They are as big as the men population. But certain things that are changing. One, their participation in workforce is going up. Currently, as per the latest statistics available, 42% of women are now employed. It used to be 23% few years back. And the literacy levels also in women is going up. Now 75% of the women in India are literate. Another interesting thing, women by nature are savers. That's something we have seen for decades and generations. Now they are at a crossroads. They are crossing from being saver to investors. It's a very, very good change for capital market participant like us. And what we have seen from those women who have invested in mutual funds is that their average ticket size is higher than the men. That's another statistics available in Amphi Vision book. Please have a read through it. The average investment by women is higher than men. And they are better investors than men. Their returns on investment apparently is higher than men. Because one, they are long term. They take rational decisions before investing, not less emotional, more rational. And they also invest in equities for long term. So I think all of this makes all of you to, I would recommend that start looking at women as a investor more seriously than you have looked in the past. The second opportunity I want to share, I don't know if this works. This is how the Indian population age is changing. So India is still a young country. The average age of Indian is 27 years. But what this short video talks about, how age profile will change over next 75 years. And what will happen is, over next 15-20 years, the number of people who are in their 40s will grow. That blue color one, what you see, you will see number of people in mid-40s and late 40s will grow faster than the people who are in the other age group. What it means from a business point of view, that once a person is getting closer to retirement, he will start thinking a lot more seriously about retirement funding. And another trend I am noticing in India, which I am sure all of you are aware, there is something called FIRE. People want to retire early. So no longer one want to work till 60 and then retire. People are actually thinking of retiring little early. It represents a big opportunity for us as a community, because once a person starts thinking about retirement, he will be putting serious money on table. So when somebody just want to invest, dabble in stock market, he'll say, okay, even if he has a 50,000 saving, we'll give you a 2,000 rupees SIP. But when start thinking about retirement, two things will happen. He puts serious money on the table. Secondly, that money will be long term. You can start recommending options like SWPs to us. And it brings serious, stable money, long term money to us. So this is a good opportunity which I want you to think about. Another opportunity is NRIs. You may be aware that there are about 1.3 crore Indians living abroad who have not obtained foreign citizenship yet. There are 1.87 additional persons of Indian origins living in different countries. So in total, we have close to about 3.2 crore or 32 million persons of Indian origin or Indians living abroad. They represent a serious opportunity for all of us. Every year they remit about $130 billion to India. $130 billion is the remittances we saw last year. If I am right, it is 14% of global remittances. And NRIs as a category in mutual fund, there are about 4%. If I have to talk in dollar terms, it's $30 billion. Every year, $130 billion is coming to India from NRIs. But only $30 billion invested in mutual fund. To me, it's a serious opportunity. Why? Because one, these are the people who are saving a lot of money. Therefore, that money is coming into India. And secondly, this 1.35 crore people, 13 million, will come back to India at some point of time because they are not yet taken a citizenship abroad. Those 1.87 will never come back. They may still have an opportunity, positive mind to invest in India, but they will not come back. But this 1.35, very likely they will come back. So they're happy to have their assets in India. And they're savers. And my interaction with many of these NRIs or the bankers who deal with these NRIs is they have an appetite for high risk and moderate risk product. And they take a long-term view because the countries they live in today, they are all in a very low interest rate regime. You go to Middle East, the interest rates is 3%, 4%. US, there are only now interest rates have gone up. Otherwise, historically, it is very, very low. So for them, 7, 8, 10% returns is a very, very good returns. And by nature, in those market, 5 years is short term, 10 years is medium term, 15 years is long term. So if you have to tell them invest for 5 years, they said, okay, they're happy to invest. And where are they? So what I've listed here, the top 10 countries in terms of NRI population, not as per the PIOs. So most of them you find it in Middle East countries. So UAE, Saudi Arabia, your Bahrain, Qatar, of the world. So I want to highlight that, yes, this is one opportunity. And another trait of these people, they prefer a dollar-denominated fund, although they are happy to have their assets in India. They also want to have an option in case if I want to withdraw, can I have money in a dollar-denominated product? Some of the wealthy ones don't like stringent KYC process. A normal retail or a mass affluent client is okay giving you all the documents, but the wealthy ones have some reluctance to do stricter KYC, which is required to invest in mutual funds. Okay, now I move to product side. There is this Choti SIP which SEBI has introduced. Few fund houses have started issuing addendum. Key features of this is the ticket size has to be 250. It cannot be 245 or 500. It has to be 250. 60 months commitment is what investor has to make, but there is no penalty if somebody stops in between or redeems in between. 3 SIPs per investor, 1 SIP per AMC is what is allowed, but investor can do more SIPs. These conditions are more for AMCs from a expense point of view. The regulator has negotiated a better pricing with all service providers for this SIP, because regulator want to have more and more public investing in mutual funds. So this is more from a AMC point of view, not as much from the investor point of view. And there is a 500 rupees per investor will be paid as a remuneration over and above the trial fee you are eligible for this one. Here, this 500 will be paid after 24 installment. Yesterday I wrote to AMFI sort of clarification. They said 24 installment, it is not necessarily 24 successive installment. So in between, if they have a break also is fine. As long as he complete 24 installments, you will get that 500 rupees. And both digital and physical forms are allowed. No, 500 paid to the distributor. And it will be paid by AMFI per PAN. If somebody start 3 SIP, AMFI will pay 500 rupees at a PAN level. Because what they do is they collect that 1 paisa from us, and AMFI is doing the settlement of this 500. Trial you will continue to get from the AMC. This is over and above that. So over and above whatever trial you are to get on the installment, you will get from the AMC. In addition to that, for every one new investor you get in, 250 rupees choti SIP, you will get 500 rupees after 24 installment. I have had a chat with few of my MFD friends. Most of them have said that was 250 rupees is too smaller amount for me to focus. But here I want to share my own personal experience. I moved to Bombay from Chennai in 2010. So till about 2013, I had a driver called Sadanand. So he was doing a good job taking care of my kids, taking them to school, bringing them back, very trustworthy person. So I started a 500 rupees SIP for him. I said, I give you your salary, whatever it is. Those days, I think 16,000, 18,000 I used to pay. I started 500 rupees SIP. And 2014, I moved from that place to another place, and he stopped coming. I had another driver. So I forgot. But he used to keep in touch with me and send me those greetings, etc. 2 years back, I think 2023, he called me and said, sir, आपने जो SIP किया था, मैं redeem नहीं किया, पर उसका value अच्छा बढ़ा है. Some 20,000 invested or something, it became 1 lakh plus. Now my daughter has started her work. She completed engineering, started. I want her to invest 10,000 rupees every month. Tell me where to do SIP. So this is an opportunity. We would have started with small 500 rupees. Similar experience I had with my brother-in-law who lives in Dubai. He never believed in any financial products. He always believed in property, gold. These are the two investments he used to make. When I was with Franklin in 2002, I started an SIP for my nephew in FlexiCap fund. Not FlexiCap, I think Prima Plus those days. FlexiCap came in 2005. Same thing, I started with 1,000 rupees. I did 12 months, I left it. Sometime in 2014 or 15, I sent him a statement. By then I moved out of Franklin. It was 2-3 lakh rupees, 12,000 invested, some 2-3 lakh rupees. He got excited. And then he started with investing some 20,000 rupees a month, subsequently increased to 50,000. So choti does not mean that only you have to look at people who can only save 250 rupees. Because even if those 250 rupees, like I told you, Sadanand has got a daughter at some point of time who could invest 10,000 rupees. My brother-in-law, who I started with those 1,000 rupees, he started investing 50,000 later. So there is an opportunity for us to go and do it. And some techniques I have found or some business opportunity I saw in this, it says that mutual fund company can offer monthly or fortnightly. So if it is fortnightly, it is 500 rupees a month. If a family has, you can start 3 SIPs, right, per person. So it is 1,500. If the family has 2 people, it is like 3,000 rupees is a reasonable amount. And if you do a fortnightly, you get 500 rupees after 1 year. So it's not a bad deal is what I want to highlight to you. Start looking at it seriously. Can you acquire 1,000 PANs in next 1 year? And start a this total SIP, if some of them happens to be Sadanand's and Navid, which is my brother-in-law, it's good for you, they will give you more assets. If not, you think that you have done something good for the society. Financial inclusion is what you have done. Another opportunity is this FOF. There is a change in the tax laws this year, whereas a fund of fund gets a long-term capital gains benefit if you stay invested for 20 years. There are two kind of products mutual funds will offer. I think you should consider them very seriously. One, the hybrid product where 60% will be invested into a bond fund and the balance 40% may be invested into arbitrage. So from all practical purpose, it will have a characteristic of a debt fund. Another product mutual fund may offer 60% into equities, 20% into gold, 20% into, 60% debt, 20% each into gold and equities. It will be like a debt multi-asset fund. This gets a favorable taxation because 12.5% tax on a capital gains after 2 years of stay. So if such fund gives you a 7% return, I have done some quick calculation, the post-tax work out to 6% plus for investor. 6% tax-free return is equivalent to for somebody who's in a 30% tax bracket is as good as getting 9% pre-tax. If somebody into higher tax bracket is as good as getting 10%. Where do you get 10% from a debt today? This is a very, very good alternative that is coming up. I think you should look at, if you look at your own portfolio, how much money is in debt and how much money into equity mutual fund. I want to believe 80-85% of your investor money is into equities. Debt used to be a reasonable opportunity for distributors till the taxation change. Now that tax laws have come back in favor of debt funds, I think you should consider when mutual funds start offering this product. Another product is SIF. It's what regulation says that every mutual fund company has to set up a separate BAU, not a separate company, and can offer about 7 products. And I have looked at the regulations. There are 7 product categories they are allowed: 3 in equity, 2 in hybrid, 2 in fixed income. Not too much of a difference from what we have currently. The only difference is in this fund, we can short up to 25% of the portfolio. In a regular fund, we are not allowed to go short. In this category of fund, we are allowed to go short. Up to 25% is what regulations say. It's not necessarily that we have to go short on this. But I think it's a decent opportunity. Minimum ticket size here is 10 lakhs and TER load disclosures are similar to existing mutual funds. It's not different from it. But it's a big opportunity because it is like a PMS, but mutual fund taxation. In PMS, you know, right? Every time a portfolio manager does a trade, there is a tax incident on the investor. In mutual fund, every time portfolio manager sells, there is no tax incident on mutual fund because it's a trust structure. This SIF is also under trust structure. So it will, I think, cannibalize the PMS category. And with all the convenience, tax benefits of a mutual fund. And the ticket size also is going to be big, 10 lakh rupees. So I think one should look at it. Another interesting thing I found in the regulation is it allows one category called mid and small cap, which we don't have in mutual funds. In mutual fund, you have a large and mid cap, you have a multi cap, you have a flexi cap. There is no mid and small cap. But in this, it is possible to launch a mid and small cap strategy. So this is an opportunity which I want to highlight here. The last of the thing I want to highlight is the gift city. I talked about NRIs being a big potential market. I also mentioned that they have this liking for dollar denominated fund. And Gift City offers 2 kind of product launches for AMCs. We already have a setup in Gift City and we are planning to launch both. One is AIF structure, CAT3 AIF. Another one is recently announced a retail fund structure. No one is currently offering retail funds. So we got a license. We probably be one of the first to launch the retail fund. The key features is if it is a AIF, the minimum ticket size is $150,000. Both inbound and outbound are allowed. That means I can launch AIF, which collects the money from NRIs, invest into Indian market, or I can launch a AIF, which collects the money from Indians, invest outside the country. Let's say US securities or European security or in Japan and so on and so forth. Both inbound and outbound is possible. Target group for AIF, to my mind, given the ticket size of $150,000, is HNIs and ultra HNIs. Resident Indians, if you want to invest abroad, NRIs if they want to invest in Indian market. What is it for investor? Why they should invest through a gift city? Why not directly invest in one? It is a dollar denominated product. So for them, psychologically, they are investing in dollar and taking back in dollar. Not that they are avoiding the currency risk. The currency risk remains because we convert that into rupee when to invest. When we have to give back, rupee is converted into dollar. The currency risk remains, but NAV is in dollar term. For them, that is the comfort. And the KYC norms in GIFT City are very, very relaxed at the moment. All I need is social security, notarized copy of a social security number and a bank statement, address proof and application form in digital form. We will start allotting the units. So that stringent process we have to follow for regular mutual fund is not there. So it's a KYC light. In case of a AIF, it can be drawdown is allowed. That means 1,50,000, not necessarily have to invest one. They can, we can allow investor to invest in 6 installments of $25,000 or 3 installments of $50,000. That's allowed. What is it for distributors? Why should one recommend this product? A, you get a larger ticket size. If you are recommending GIFT City AIF, $150,000 is a reasonable sum of money. And whatever brokerage is paid is free from GST. There is no GST applicable on the brokerages. If by chance you have some office, a presence in GIFT City, whatever you receive is free from income tax for 10 years. Irrespective whether you have an office or not, there is no GST applicable. So if it is 1% remuneration means it's 1% net to you, not 1% gross. It's not 83 thing. So that's one big advantage. There is no prohibition on upfronting of brokerage. It's between you and the asset management company. If I have to pay upfront, I can pay upfront brokerage here. An existing ARN is good enough to mobilize business. You don't need a separate registration for it. And all you need to do is you have to file one declaration of good conduct with the regulator, the GIFT City regulator, once in a year. Retail fund, to my mind, is a very, very big opportunity, is going to explode because the minimum ticket size is there is just 100. It is likely that most AMCs may not launch with 100, but they may launch with $10,000 or so because 100, there is a cost of KYC to be done by AMCs. Again, all the benefits which I talked about are there. You can also reach out to retail investor also. Even if it's $10,000, it's about 8.5 lakh rupees. I don't think it's a big money. Both inbound and outbound is allowed. Okay, this is my last slide. What I suggest from whatever I spoke, first pick one of the segment you think is makes sense for you, either by product or the profile. You think that women are my segment I want to focus on, or NRIs is the segment I want to focus, or from a product point of view with an SIP or SIF or a GIFT City product. Have one strategy, do some amount of awareness and engagement activities. How do I reach NRIs in Dubai, or how do I reach NRIs in Malaysia? They all have associations. So can you be part of those association meetings? Because the associations meet, like you guys meet once a month. I know that those associations also meet. Can you make one visit, make some contact and be part of those things? They are also eagerly waiting for somebody to come and talk about it. Digital marketing is another way to reach. Improve your social media presence. Be active, because most of these first timers are can be acquired through those digital activities and through social media presence. And like you have always done, upgrade and embrace the change. So these are few thoughts I wanted to share. Thank you so much for your patience listening.